While watching bullish price actions, let us inform you. Our review on BULL. Webull Corporation, a cutting-edge digital investment platform, has seen some explosive developments recently, especially in light of its shares' wild ride in the market. This platform, which allows users to trade U.S.-listed stocks, exchange-traded funds, ETFs, and American Depository Receipts, ADRs, has become a powerhouse in retail investing, especially with its ability to facilitate fractional share trading. This means that investors, whether seasoned or newcomers, don't need to buy a whole share of a high-priced stock. They can invest in just a fraction of it. But recently, Webull stock has become a hot topic, largely because of a major spike in its market performance after the company's merger with a blank check firm, SK Growth Opportunities Corporation. So, let's break this down. Webull stock, identified as Bull, rocketed 478% to a jaw-dropping $76.58 in a single day. That's a huge leap. To put that into perspective, on Friday, just before this surge, Bull closed at $13.25 after a NASDAQ debut. Now, the stock has shot up so dramatically that it's poised to add a massive $30 billion to its market cap if the gains hold. This level of growth is a signal that Webull is not just a player in the retail investing space. It's a rising star. It's clear investors are keenly eyeing its future potential. What's fueling this excitement? Well, Webull, founded in 2016 by Anshuan Wang, an Alibaba veteran, has been offering an easy-to-use platform that attracts investors from all walks of life. Not only can users trade traditional assets like stocks and ETFs, but they can also dive into cryptocurrencies. The fact that Webull launched in the US back in 2018 and has since expanded to 15 regions globally, covering areas like Asia-Pacific, Europe, and Latin America, shows it has an impressive growth trajectory. With over 23 million users worldwide, the platform has been slowly establishing itself as one of the leaders in the online investment game. But let's dive deeper into what's going on right now. After that meteoric rise in the stock price, people are weighing in on whether they see this as a good long-term investment or if it's just a short-term play. According to a recent survey by Barchart, 34% of retail investors are bullish on Webull stock as a long-term play, while another 31% think it's a good short-term trade. That's a pretty solid split, but it speaks to the broader sentiment that while there's a ton of excitement about Webull's future, some investors are cautious about the sustainability of such rapid growth. In terms of market cap, Bull is now sitting at around $6.24 billion with about 471 million shares outstanding. But with this 374% jump and heavy trading volume, some 36 million shares traded on Monday alone, that market cap could see a swift rise, potentially crossing the $30 billion mark if the gains continue. However, there's a bit of caution creeping in as well. After hours, the stock dipped around 15%, indicating that while Webull is hot right now, there might be some investors taking profits or getting a bit nervous about the stock's high volatility. When stock jumps this quickly, it's not uncommon to see some pullback. It's the nature of these explosive moves in the market. So where does this leave us? Webull is undeniably on a growth spurt, and this merger with SK Growth Opportunities Corporation has clearly put it in the spotlight. The platform's user base continues to expand, and with its seamless interface for trading stocks, ETFs, crypto, and its robo-advisor services, Webull is positioned as a major player in the world of digital investing. However, with its meteoric rise, investors need to ask themselves some hard questions. Is this the start of a sustained bull run, or are we witnessing a temporary surge? While many are bullish, especially in the long term, the stock's sharp movements and recent after-hours dip remind us that volatility is very much in play. Webull has a lot of potential, but as with any fast-moving stock, caution and careful analysis are key. Investors should keep a close eye on its performance and be prepared for some bumps along the way. Please subscribe, give the video a like, and watch more from our playlist. Thanks.